Hey everyone, welcome to today's video. I hope you are good. Now, market manipulation. We're going to talk about Tether, its prints, and why this kind of does matter if you are struggling with FOMO. Let's find out. So hi, welcome. If you're new to the channel, subscribe, hit the bell button, like, comment, do whatever you want, right? Troll me. Hey. So, on the screen here, feel free to follow me on Twitter, on socials, Instagram, whatever. I'll put the link somewhere. Anyways, okay. There's a lot of money being printed right now over time. Okay, this has been printed over a period of 6 weeks, and it's been mainly coming from the Tron blockchain, typical Justin Sun on his little face, going via Binance into the market. Now, I personally believe, and this is what this video is going to explain, that I feel like this is an artificial pump, and we will eventually close the CME gap, hopefully, and we'll probably start going down. There's a lot of factors in this video that I want to mention, which a lot of people are forgetting about, okay, and it's kind of obvious. So overall, we're looking pretty crazy right now. People are FOMOing. People think that Bitcoin halving equals moon. Usually not the case. I'm in a positional hold where I hold for a long period of time, pretty loose in terms of liquidation prices, quite a way away. But when you look at all these sort of stuff of where the increase is coming from, it's absolutely crazy. Now this is just one account here, stablecoin printer, which is pretty decent. But if you go on to, like, I don't know, what's the other one? Is it whale alerts? Whale alerts. Boom. So let's have a little look at. So over the last few hours, you can see these big moves are coming from certain exchanges. Now this one's probably going out, but when you see the ones going from Tether, so let me find it. There you go, Tether, Treasury to Binance. There's a lot of these going in and around from the Treasury into Binance. There's another one there. There's another one there. There's quite a few of them. Obviously, these big Bitcoin ones are quite big. But you get these are happening all the time. The big, massive cash monies, they are flooding the market, and it's creating an artificial price action, which is what you need to be careful of. So, next part of this video is simple. Tweets. Tweets are going down. They are going down at quite a big rate in reality when you start to consider what's been happening over the last, few days. Now this is halving. Crazy, really. When you look back, we're actually the run up to people get excited about halving. We're really down. Like, everyone's going, oh, it's over now. I'm not bothered anymore. It's gone. Bitcoin's a scam. So yeah, there's all kinds of stuff in here, by the way. Just to let you know, Bitcoin charts. You can do block sizes, you can do everything, right? But I wanted to look at tweets, but also Google Trends. Look at this. Wait for it. This is going up, right? It's over a 3-month period. But when you look at the actual, there's a lag on this one. When you look at the Google Trends on this one, we're starting to trickle down again. Ooh, I wonder why. So, one thing that prices happen to follow is trends of hype. People buying volume. Obvious, really. It's an investable asset. So, when you start seeing things like the tweets going down and the Google Trends going down, yet Tether is printing money and the price is still going up, don't go long, in my eyes. Don't go. I think it's very, very risky. It should be the other way around. You should be going long when the trends are going up, when the Google tweets or what Google tweets, Twitter tweets are going up, all that good stuff. That should be your hype marketing. People getting excited. The FOMO run. We're past halving. The tweets are going down. The Google Trends are going down. More or not, probably other bit of data out there is showing things are going down. Let's go to the next part of this video. Bitcoin hash rate is tanking. Nobody panic. Now this was always going to happen, but it depends on how long it lasts for. So throughout this article, it's actually pretty good. So in terms, right, it explains what the halving's done and what the hash rate is. It's an aggregate measure of how much computing power is required to basically mine Bitcoin. It has pulled back roughly 20% so far. That is good for the miners. Good for the miners. However, it isn't good if it keeps going, because you're going to have issues with other elements as well. Because it's a hard one to explain because this falls when miners knock off. This also falls when the price comes down. The price hasn't came down yet. If this goes and keeps falling because miners have knocked off for a bit just to try and drop it, yeah, cool. But if the price falls quite significantly over a period of time, the miners are going to have issues if this carries on going up because miners have then knocked their machines on. I hope that makes sense in a weird kind of way. So looking through this article, it's actually quite interesting. It gives you the whole overall cost and averages of revenue that it costs them to keep the miners running. But when you put the outlay that miners have knocked off, the hash rate has dropped quite significantly, it should be temporary. However, the problem is if the price does correct over a period of time and the miners think, oh, this is quite a good opportunity to jump back in, the hash rate will fly up again. It will go up. If the price is lower Bitcoin and the hash rate goes up, it's going to cost them more to mine it. So then you're going to have a bit of a sticky situation, as in it'll be unprofitable for a while. And that could be where the issues actually do lie long term. So some of this is really, really good information, but there's something in here that I wanted to point out to you. Where is it? Here we go. If the prices move towards 7k range, and the mining space will see a more drastic reset in the mining landscape post-halving, but with a 9 to 10k price range, then we should see the hash rate recover by June. So there's definitely like question marks over the next 6 weeks at least, in my honest viewpoint, over the next month or so. My personal thoughts anyways. But there is also a CME gap which I want to talk about, and this is where the price is currently looking likely to go and probably stop and turn around then be filled. Maybe due to the Tether prints to try and get that done, sorted. But I think overall the price of Bitcoin needs to drop. It needs to drop in my eyes to correct. It's been up for a long time. It'll help the miners with the hash rate as well if it corrects quicker than if it was going to be a nice slow burning recession essentially of price. So when you look at the Bitcoin price here, the chart, we have been here. We're looking likely we're going to test this and it could create a double top at 10k, which would also give us the element of, well, surprise, we've got a CME gap. Now I'm going to get this CME gap up right now, and we are very, very close to filling this gap, boys and girls. We are almost there. If this fills, and if this does fill, this would be, in my eyes, a very, very bearish solution to the problem. We are literally almost there. So maybe by the time you're watching this video, we might have filled it. We are very, very close. It just needs to fill up an extra $100. Considering where we were when we started this weekend, at 8,200 pretty much at the low, and where we are now, pretty interesting. So I have a short position in right now. It's still running. I am a positional trader, so it doesn't really matter. I use a very, very low leverage, and I ride the overall trend. If you go on the weekly time frames, what I do, you've probably already noticed, I ride the lows and the highs, right? High, down, low. You get the picture, right? This is definitely looking likely it's going to turn around at some point. This is a very interesting candle as well, depending on where it shuts. We've still got quite a few days of the week left. We've still got, what, three and a half days essentially. If this does fill the gap and we reject, it could be very, very interesting. It could form another gap at some point, who knows? But I'm definitely bearish more than bullish. And a lot of people think, well, I'm a bit crazy, but when you look at the overalls, and that's a cheating trend line, I do apologise, but you can kind of get the picture here. You know, regardless of if you're using wicks or bodies or whatever, you know, it's still, in my eyes, it's looking pretty bearish until it flips. Boom. You know, that could happen, but I find it very, very unlikely anyways. But if this gap does get filled, and we've already seen it, you know, where this gap is, yeah, we're not too far away. Let's make that pretty obvious. So the gap is 65 away essentially from that point. But if you're going to go from where the open of that candle is, looking at roughly $200, $215 away at the time of this recording. So yeah, very, very interesting to see what happens next. So that is pretty much today's video sorted and done. Obviously, Bitcoin technicals, you can see where we are. It's, you know, it's definitely getting interesting to see where we are in terms of the reality of where things are lying. These gaps, they do get filled at some point, and it's looking likely we are going to fill it, possibly hit this resistance level, and then just absolutely tank again, maybe, possibly. If you look at the daily though and start moving around with the trend line a little bit, Let me just try and do this. You know, it's not the most ideal. That's like a cheating trend line. It's much better on the weekly time frame. Weirdly, just one of those things. People are bullish. I think this has got further to fall in my honest viewpoint. Anyways, we've not created a higher high for a long time yet. So yeah, hope you enjoy. Looking at my trades right now. Could be fun. But yeah, see you again tomorrow. Have a good one. And yeah, stay safe. I would not FOMO into this position right now if I was God honestly truthful. Yeah, you're going to get wrecked.